Okay, it looks like everybody's in the room now, so let's go back to the beginning of the presentation here. So what we're going to be focusing on in this lesson is trend analysis, and particularly in regards to the transition from an uptrend into a sideways trend or the transition from a downtrend into a sideways trend. Now, before we get started, let's just go over the basics. Now, what is a trend? A trend refers to the direction of the stock. So it could be up, sideways, or down. The reason that we monitor the trend is because it provides us with information in reference to supply and demand. So if the demand is overwhelming, it indicates to us that the buyers are in control of the stock. So it's best that if we are going to trade this financial instrument or the stock, that we trade in alignment with the controlling party of the stock. And also in reverse, if the supply is overwhelming, indicating that the sellers are in control, once again, it's best that we trade in the direction of the dominant party. And the way that we determine the trend, in this particular presentation, we're going to focus on the raw price data. So we're going to focus on the arrangement of the price pivots. A series of higher highs and higher lows indicates the price is in an uptrend, and a series of lower highs and lower lows indicates that price is in a downtrend. We also have a series of equal highs and equal lows indicating that price is in a sideways trend. Let's cover a few introductory points. Trends occur in many time frames. We often refer to this as multiple time frame analysis, which we'll cover in another lesson. The trend indicates which participants are controlling the price momentum, the buyers, the sellers, or are prices at equilibrium. We should always align our decisions with whoever is in control of the trend, the buyers or the sellers. And this is where the ability to recognize the trend will greatly increase the odds of a successful outcome in your trading, because the least risky or the most profitable approach to market participation or trading is to enter stocks at retracement points and breakdowns in the direction of the prevailing trend. So here we have 10 line charts or stick figures of trends, and we're going to delve deeply into those in the upcoming slides. So first of all, we're looking at a basic uptrend. These next 4 uptrends are all transitioning. So they've exited the uptrend and transitioned into sideways trends. There's 4 particular price patterns that provide you with a heads up that the trend has ended, the trend has ceased, and therefore the odds have changed. In an uptrend, it's high odds trading to the upside. Once these trend transitions occur, the odds have changed because the buyers have lost control. This here is where an indication or a price pattern that the buyers have lost control. So we'll look at those 4. And in reverse here, or vice versa, we have the downtrending stock, okay, where it's high odds trading to the downside or short selling the stock. Once we begin to see these particular price patterns that occur here in these 4 representations, it's an indication that the downtrend has now ended and there's a lot more demand coming in to this particular stock. So therefore, looking to continue to trade this instrument to the downside is a very low probability, has a low probability outcome. So here we have our line charts or stick figures of an uptrend, and we're looking at price forming a pivot high right there, which is higher than the most recent pivot high that's been formed. So there we have a pivot high. This pivot high here is higher. When we look at the pivot lows, we have a pivot low there. We also have a pivot low here. This pivot low is higher than the most recent pivot low. So we have a series of higher pivot highs and higher pivot lows, indicating that price is in an uptrend, that demand is overwhelming the stock, therefore the buyers are in control. So ideally, the way that we would approach this particular stock is that we would be looking to buy retracements within the trend and breakouts from consolidations. So if we go over here, all retracements should stall and form a higher pivot low at a minor support area. If the pullback moves from minor support to test major support, it would suggest trend weakness. And we'll look at that further in the raw price data. So here we have a price moving to the upside. It pulls back here, it pauses. We're looking for, during this pullback phase here, this leg to the downside, we're looking for the price momentum to stall, and then the buyers come back in and push price to the upside. In this particular instance, we have price consolidating to the upside here. It's just consolidating sideways rather than pulling back. So that's an indication of strength. Okay, if it was to pull back, it'd be slightly weaker. It would be an uptrend, but considering that it's consolidating sideways at an area of resistance, that's an indication of strength. You look for it to pop to the upside and continue the uptrend. Then we look for this pullback momentum here. We look for it to slow and then reverse and move to the upside. So that's our uptrending price action. The downtrending price action is we have our pivot high, a lower pivot high here. There is a pivot high over here. So this is a lower pivot high in relation to the most recent pivot high. So we have a series of lower pivot highs. Then our pivot low here is lower than the most recent pivot low. Okay, so we have a series of lower pivot lows. So lower pivot highs and lower pivot lows indicates that this stock is in a downtrend. The ideal approach is to short retracements within the trend and short breakdowns from a consolidation. So we'd be looking for price to move to the downside, then reverse up, retrace to the upside, looking for that retracement momentum to slow, then roll over and move to the downside. Here we have price consolidate sideways and then pop to the downside. And as price continues to move to the downside, it will obviously rest it or pause at some stage and retrace slightly. Move to the upside, looking for those slowing momentum candles or bars, and then looking for it to roll over and continue to the downside. So ideally, the ideal way to approach this would be with all retracements, they should move up and stall and begin to form a lower pivot high at an area of minor resistance. So we'd be looking for this to move up here, begin to roll over to form a pivot, a lower pivot high at potentially, RT means retrace, BD means breakdown, and sorry, I forgot to refer to it over here. This is a breakout here, BO is breakout, RT is retrace. So we're looking for this retracement here to retrace up to an area of resistance that would be on the left-hand side. It's not seen here within the line chart or the stick figures. And then that momentum to slow and then roll over. Okay, if price here was to potentially move up further than that and test a previous high in the stock, which is an area considered major resistance, it would suggest trend weakness. And we'll look at those concepts further on in the slides. So here we have our first transition. So this is an indication that the uptrend is now ending. And what we're looking for, what we're trying to distinguish here is that price is retraced 100%. So we have the uptrend intact. Okay, so we've got a series of let's say three, maybe four higher pivot highs, higher pivot lows. Then this last leg up here pops to the upside, makes a marginal new high. So it just marginally pops above the most recent pivot high. Okay, and then this leg here retraces the most recent move. So it retraces the most recent move here by 100%. Okay, so that 100% retracement there indicates that now that the supply is beginning to overwhelm demand. So we're looking just changes in supply and demand. So here we have clearly demand is in control, the buyers are in control, and when the stock reaches this particular price point here, we see the sellers come in and the sellers drive price down 100% of the most recent leg to the upside. So this is our first trend transition. Okay, so it's an indication that supply is increasing. As we move over here, this is a sign of weakness in an uptrend. What our approach to this would be to consider taking profits, but we're not wanting to short because this most recent pivot low hasn't been violated. So price may just move or transition into a sideways trend, may consolidate within this trend and then pop to the upside, or it may eventually roll over and move to the downside. We don't quite know what's going to occur there, so it's not weak enough to consider shorting yet. Okay? If you're looking to buy, you could buy, okay, but you have to understand the odds have changed. If you're buying here within this uptrending price action, the odds are very high that you'll have a successful outcome. But now that we see this indication of supply or selling come in, we must consider that the odds of a successful outcome have decreased somewhat because the selling has been so dominant on this most recent leg to the downside. Further, the 100% retracement suggests that it will not move up and make a new pivot high. So this 100% retracement to the most recent low is suggestive that price will not rally to the upside and make a new high because of this particular trend transition. Now, if we look at the new low reversal, we have exactly the same, but in reverse. The downtrend has been dominant, supply has been overwhelming, price has been moving to the downside. Then you, on the most recent leg to the downside, you get that pop lower, marginal pop lower below major support. Then price reverses 100% of the most recent leg to the downside. Now that's an indication that demand is coming into the stock at this particular area on the price chart. So we have a clear downtrend here where the odds of a successful outcome with regards to shorting the stock is very high. And now that we have this 100% retracement leg of the most recent retracement leg to the downside, this indicates that demand is beginning to come into the stock. So this is a sign of weakness in a downtrend. If you were short this, if this was a long-term trade and you were investing or looking for a few weeks worth of downside at price action in regards to this trend, you'd be holding on. But once you begin, I should say, to see this price pattern here, you would consider exiting that trade. So you're best to look to stand aside. Look, you could short this, okay, and look for a move down, maybe only 50% of the most recent leg to the downside. You wouldn't expect price to move down and form a lower low because demand is coming to the point here where it looks as though the buyers are beginning to step up and potentially take control. Okay, so the next transition that we have is the double top. This is where we have price moving to the upside in an uptrend. And notice on this leg to the upside, the retracement is normal. It all looks like an ordinary uptrend. You would be entering here, you'd be a buyer here, and you'd be looking for price to move up and make a higher pivot high. But in this case, price only moves up to the most recent area of resistance or the most recent pivot high and then rolls over and comes back in. So this retracement leg here is 100% to the downside. So here we have a retest of the most recent pivot high. We can refer to this as a double top. Okay, and what it means here is that price makes an equal pivot high, indicating that the selling is increasing or the supply is increasing. Here we have demand overwhelming, and as the trend transitions here, we can see supply coming into the point that the most recent leg to the upside and the most recent pivot high, there's enough sellers in this area to drive price back to the downside by 100% of the most recent leg to the upside. So this is a strong sign of weakness in an uptrend. The price support hasn't been broken. So this most recent area of support hasn't been broken. The selling has increased to the point of neutralizing the demand that was present. So there was lots of demand here. It was overwhelming. And now the demand has been neutralized and the uptrend has ended and price is transitioning into a sideways trend. So what we're doing here is we're realizing that the odds have changed. The odds have been very high for a successful outcome over here as price has been moving to the upside. So if you're a buyer here, you'd be expecting a successful outcome. But now when you begin to see this particular price pattern here, you must realize that the odds have changed and you cannot expect the same type of outcome or the same type of odds that you had if you were a buyer for this particular area of the stock here relative to the price action that was occurring previous to it. Now in the downtrend here, we just have the reverse where price has been moving to the downside. If you're a seller within the stock, the odds of a successful outcome to the downside are very, very good. Once again, we have price move down. It pulls back here. You'd be looking to short the stock here, look for it to move to the downside. However, it moves down and it forms an equal pivot low. There's the most recent pivot low. It forms an equal pivot low and then pops to the upside by 100%. Okay, that's an indication there that demand is increasing. Okay, so we clearly have supply overwhelming the stock here. The sellers are dominating. However, when we begin to see this particular price pattern, it is a clear indication that demand is increasing and therefore the odds have changed as well. So we do not want to approach this particular price pattern the same way that we would approach this particular trend that is occurring here as well. So this is a strong sign of weakness in a downtrend. Price resistance hasn't been broken, so this most recent pivot high hasn't been broken yet, but demand has increased to the point of neutralizing the supply. So you'd be looking to take profit and potentially with a double top here, it would be riskier because the trend hasn't changed yet. But if price pulled back to the downside here and began to form a higher pivot low, that would be a potential buy point for you. Okay, but it is higher risk because the trend has yet to change. But these are indications here of a potential trend change. Now, as we move into the next transition phase here, this one has a slight nuance to it. So there we have an uptrend on the left-hand side. And what I want you to notice here is that price moves to the upside. And on the most recent leg here, the pullback violates the most recent support reference point. Okay, so we have price move up here. We're looking for price to pull back. If it is a strong uptrend, price should begin to pivot here. We should see that slowing momentum, those smaller bars or those smaller candle bodies, price potentially pivot and push to the upside. But here we have price move down through the most recent support reference point. This is our first sign that the supply is coming into the stock here, and there's this potential transition occurring. And then we see price move to the upside. It begins to form a lower high, and then it rolls over once again. So this is a classical head and shoulders pattern. It won't look exactly like this, but this is the type of pattern that you're looking for. So here you have the retracement concept here, indicating that the supply is beginning to enter the stock, and then a lower pivot high indicates that supply is beginning to enter the stock. So this is a trend transition into a sideways trend. The odds of a successful outcome to the upside, if you're looking to be a buyer here, are very low. They're completely different to the odds that would be in your favor over here on the left-hand side. So this is a strong sign of weakness in an uptrend. Price support hasn't been broken, but supply has increased to the point of forming a lower pivot high. Okay, so there's that lower pivot high. Take profits and potentially look to short a breakdown or short the next lower high that forms. And here is the reverse. We have the inverse head and shoulders or reverse head and shoulders, or the higher low. Price is down. There we see it move to the downside. We would be looking for price to retrace into the most recent pivot low, the minor resistance area there. We'd be looking for those slowing momentum bars or candles, and then looking for price to roll over and move to the downside. However, we have that deep retracement, okay, that violates the most recent area of resistance, and then price rolls over, forms a lower high, and pops to the upside. So this, once again, is a strong sign of weakness within the downtrend. We can see that the highs haven't been broken yet, but these higher lows that are forming here and these deep retracements are indicating that demand is entering this particular stock now. So the downtrend is transitioning into a sideways trend. So our approach to this particular stock is completely different than the approach within the downtrend. And here with these particular breakdowns in trend and breakouts in trend, there is no transition into a sideways trend here. It goes from, or the stock goes from a clean uptrend into a pretty much a downtrend immediately, although not the accurate technical definition of a downtrend where we're looking for a series of lower highs and lower lows, but we have a clean uptrend here. We see that price pulls back here. This first area of support, the minor area of support, is violated, and the major area of support is now violated. This is a strong indication of a trend change, okay, because the support reference points have failed. The buying here has failed. Demand has been overwhelming, and would be looking for price to potentially retrace up here, and then we could look to short sell. Okay, we could, as momentum begins to decrease here, we could be looking to short sell this to the downside. Okay, the uptrend has clearly ended. Downtrend, and we see that price retraces here. It violates that first area of resistance, that minor area of resistance, okay, the previous low. It violates that. It also violates the major resistance area. Okay, so that's a clear indication that the sellers have lost control, the supply has failed, and the buyers are stepping up into this particular stock here. And we can see that it moves up, it makes a higher pivot high in relation to the most recent pivot high. So there's the most recent pivot high there. This is a higher pivot high, so this is the beginning of a trend change. The downtrend has ended. So once again, do not approach this particular price pattern the way that you would approach the clear downtrend over here. The odds of price moving down and forming a lower low here are very low, very small. So we'd be looking for price to pull back here. We'd be looking for that decreasing pullback momentum. We're looking for the candles to be smaller, the bars to be smaller, price to pivot, and then transition to the upside. Here, so in our first price chart here, we're looking at a stock in an uptrend. And so here we have price pulling back, forming a higher pivot low. Price pushes to the upside. That is a higher pivot high relative to the most recent pivot high. This is a higher pivot high relative to the most recent pivot high. Higher pivot low, higher pivot low. So there we have a series of higher pivot highs and higher pivot lows. So we have a clear uptrend. We can see here that this is a retracement. Price retraces. Over here we have the most recent area of resistance, which now becomes support. Okay, so as price pulls back into this area here, you'd be looking for it to stall. You can see these candle bodies here becoming narrower and narrower, indicating this pullback momentum is slowing, and then you're looking for price to pop to the upside. Here we have a very strong uptrend at this particular point because price just consolidates sideways. Notice that it doesn't pull back. It doesn't pull back to the most recent highs here. It just consolidates sideways and then pops to the upside here. Price forms a new pivot high. So this is a higher high relative to the most recent pivot high. But notice on this leg to the downside here, this most recent area of support is violated. So there's minor support up there, the most recent high, that's clearly violated. And the most recent low, price moves down through that, closes lower than that, so that's clearly violated as well. So now we have if we're looking to buy again, these are very, very low odds to go and buy over here. Okay, you wouldn't be looking for price to move to the upside and form a higher pivot high. Okay, the trend has clearly changed. So now we have a reason to potentially short price. We can see that price consolidates sideways, goes nowheres, very, very choppy price action there, and then rolls over and moves to the downside. So this transitions from a clear uptrend into a clear downtrend. In this price chart here, the raw price action, we have price forming a series of lower pivot highs, which is denoted by the red stars. There's our lower pivot highs. And we have price forming a series of lower pivot lows. Okay, so we have a clear downtrend here. The supply is overwhelming. The sellers are in control. The highest odds approach to trading this particular stock is to short sell it when price retraces to an area of resistance, preferably an area of minor resistance, which would be a prior low here. And notice that the downtrend is still intact here, but the momentum slows and then eventually it breaks again and moves to the downside. So you'd be looking here to short sell as it rolls over, looking for those decreasing momentum bars, looking for it to roll over once again and move to the downside. So we have this clear downtrend occurring here. Then notice on this most recent retracement here, we have price close above the most recent pivot high. Okay, so price retraces right back up here. It actually closes above this pivot high over here as well. So it violates two areas of major resistance. This first area of major resistance here and this second area of major resistance here. So these two areas are violated. This is a clear indication that the sellers have lost control. The buyers have stepped up and taken control of this particular stock, pushed it to the upside to form a new pivot high. And now as price pulls back here, we would be looking to be buyers here and look for this uptrend to begin. So we have the downtrend end, and it moves right into an uptrend immediately. Rather than going into a sideways transition, it just moves from a downtrend into an uptrend immediately, pulls back, forms that higher low, and presses higher. Okay, so once we begin to see these areas of resistance being violated, indicating that the sellers have lost control, the buyers have now taken control, demand has become overwhelming, the supply has ceased. Well, we can clearly see that the odds have changed. We have to forget about looking to be sellers here. Okay, there's a clear indication that the sellers have lost control, so the odds are now with the buyers being a buyer of the stock rather than a seller of the stock. So as price pulls back here, we're looking for that slowing momentum and then that pop to the upside. Okay, so this looks a little bit complicated, so let's go through it slowly, but it's not complicated, it just takes a little bit of patience to get through this. So what we're doing here is we have an uptrend on the left-hand side here, price is moving to the upside, okay, it forms a pivot high. It pulls back here, forms a pivot low, moves up, forms a higher pivot high. Okay, so we have the uptrend intact here, and notice on this retracement leg here that this area of minor support, the previous high that I've marked off, is violated. So price begins to move down through there. So here we have demand dominating, the buyers are in control, and over here we begin to see that they pass the baton to the sellers step up here and begin to dominate. We get a 100% retracement of the previous leg to the upside. So there's the previous leg to the upside, and here is a 100% retracement. So we're in a trend transition phase. The trend has moved from an uptrend into a sideways trend. Remember our expectations on a 100% retracement here is that price will not move up and form a higher pivot high. So here, as price moves up, it forms a lower pivot high. So this is within the expectations. Now, we could, if we were aggressive traders, we could look to short sell this because the uptrend has ceased, it's over. We're transitioning into a sideways trend, so we could potentially look to short sell this here. It is a very high risk play. There are lower risk plays than this, but this is for aggressive traders. And we see that price now pulls back, violates major support. So now we've had the sideways transition, and now price is transitioning into a downtrend. We have this lower high, lower low, major support. Okay, the most previous low has been violated. Now as price pops to the upside, it rolls over, forms a lower high, or it's a messy lower high. It's a consolidation, very choppy sideways consolidation, and then price rolls over here, forms a lower low, okay, consolidates. Notice it's even unable to retrace here. It's unable to move to the upside, okay, indicating that the selling or the supply is dominant here and the sellers have control. Okay, so it chops around here and then eventually breaks to the downside once again. So we could short sell this breakdown. Once it violates this area of support here, we'd be looking to short sell this and take advantage of the move to the downside. So here we have an uptrend, a trend transition, okay, of the lower high, the head and shoulders pattern, okay, and then price rolls over and transitions into a downtrend. So we have price aggressively move to the downside here, and then retraces here, pauses. You get those smaller candle bodies, those smaller bars there, indicating the pullback or the retracement momentum is stalling, and then you look for price to roll over and continue to the downside. In this example, we have the reverse here. So we have a downtrend that has been occurring over here on the left-hand side. That star represents a lower pivot high. Price has formed we just have no price action to the left, so I'm not sure where that's come from, but we have the high here, the lower pivot high, lower pivot low there. So we have a downtrend. We get a greater than 100% retracement here. Okay, so this downtrend has now ended. And so price forms a pivot high here. Sorry, a higher pivot low here, a higher pivot high over here. Then price pulls back. Okay, forms a higher pivot low. Then transitions here. Notice that it chops around. It doesn't pull back here, it consolidates sideways and then pops to the upside here. Okay, so we have this in a clear uptrend right now. There's a series of higher pivot highs, higher pivot lows, so the demand is overwhelming. The buyers are dominating the price action here. We sort of have a choppy it's like a pullback, but it chops around, consolidates sideways, indicating strength once again. It continues to pop to the upside, so the buyers here are really dominating this particular stock. And here it rolls over, and what are we looking for here? We see our first sign that potential weakness is creeping into this particular trend. We have minor support, the most recent high. Price pulls back and violates that minor support reference point, indicating that the supply is beginning to increase here. Then eventually price pulls back, and that's a 100% retracement of the most recent leg to the upside. So there's the most recent leg to the upside. There is that 100% retracement of that. That indicates that supply has come in and neutralized the demand. So the demand here was 100% move to the upside and 100% retracement. All of that demand has been neutralized now, which is an indication of a trend transition. Price attempts to pop to the upside there, forms a lower high, and then closes below the most recent pivot low. Okay, so this uptrend was ending right here, but this is a clear indication now that a prior low has been violated. The uptrend has clearly ended, and price continues to fall to the downside there. So there was very difficult to have a trading opportunity in this particular, to the downside, I should say. So if you were looking to trade to the downside or take advantage of price moving lower, this was a very difficult setup to take advantage of. It was just chop. You get that initial weakness come in there. Okay, the uptrend ends, the initial 100% retracement comes in here, the weakness comes in, and then it basically just rolls over and moves to the downside. This could have been a news announcement. We just don't know what it was, but there was very few trading opportunities there to trade that to the downside and take advantage of that. So once again, just iterating the trend transition here. This is the lower high head and shoulders trade. Now this example is of the reverse scenario. So we have price moving in a downtrend here. We have a series of lower highs, lower lows, lower lows. Okay, now as price moves down here, it chops around, has another leg to the downside. Once again, there's our most recent resistance reference point. So ideally, if the trend was to continue lower, we would look for price to stall at this area, roll over and move to the downside. We can see that it does stall there. We have those narrowing candle bodies right there, right, indicating that the momentum has slowed, but eventually it pops to the upside, and we have a 100% retracement here. It's a little bit greater than that. We can see the tail on the candle there, but really we have a 100% retracement so this leg to the downside here is retraced by 100%. Price pulls back, forms a higher pivot low, and then moves to the upside. So our first indication that the trend was in trouble was minor resistance. The most recent pivot low has been violated. Price moves up to that, and then price forms an equal high with the most recent pivot high. So this is our indication that supply, the sellers have lost control, demand is picking up, and the buyers begin to take control here by creating this greater than 100% retracement. Price pulls back. This higher low is potentially buyable, but looking here at the range here, the actual trading range within these bars, it's very wide. So it'd be very difficult once again to take advantage of this. You'd have to be potentially scalping a move to the upside. And then here we can see that price moves up aggressively. Okay, it trades above multiple areas of resistance, okay, indicating that this is a powerful move to the upside. It's just sliced through those areas of resistance to the left-hand side there. It pulls back here to some choppy overlapping bars. It pulls back, okay, forms a higher low, and then continues to press to the upside. So this is very, very dominant demand here, or dominant buying action here occurring in the stock. So we can clearly see that the trend had moved to the downside here. The transition occurs. Okay, it's called a higher low, inverse head and shoulders there, and then the trend transitions into an uptrend. So we'd be looking to be buyers here. So we're looking to be sellers here. Okay, and once we see this transition occur, we have to disregard selling. Okay, we're not sellers anymore. We have valid reasons to potentially be buyers now because of the trend transitions that are occurring, and we look for price to move to the upside and press higher here, potentially take advantage of this pullback here, and if you're quick enough, get on board and take advantage of this move to the upside. And here we're looking at the 100% new low reversal. So here we have relatively sideways trend. The price breaks down, moves to the downside. Okay, price forms that lower pivot high there and then breaks down, and price moves to the downside here. Notice that it forms a pivot low, it retraces up, it forms a lower pivot high, it rolls over and moves down, and it marginally violates the most recent area of support, okay, and then pops back up. Okay, so this is where we have this marginal new low, and at this particular area the buyers step up. We can see the retracement here is only 2 bars. Okay, and it's able to retrace 100% of this leg to the downside. So there's this leg to the downside there. It retraces to the upside by greater than 100%, or just marginally greater than 100%. chops around here, consolidates sideways, and then pops to the upside. So if you were a seller here and you were looking to take advantage of these moves to the downside here, this would be the opportunity here. This would be the move lower. Okay, and you're likely to get chopped up if you took advantage of this because of the look at the range of the bars there. So there's a lot of range of price movement within these bars, and then the following bar retraces that all up. So this is very, very difficult price action to manage if you're trading it. And then here we have no valid reason to continue looking to short sell the price action anymore, because we have this 100% retracement here of the most recent leg to the downside. Price consolidates and then pops right back to the upside, pulls back here, forms a high, a low, and then pops up once again. Very, very choppy price action. So once again, just noticing here on this leg lower, that price just marginally breaks the lows. Okay, pops back up. We have the sellers dominating price action here. The supply is overwhelming, and then the buyers step up very strongly here and push price right back to the upside. Okay, so this is one of those patterns. You don't see it that regularly, but it is a trend transition, and the sooner that you can recognize that this is occurring, the safer you'll be to stand aside. So you're looking to sell here, potentially stand aside if you're seeing this type of volatile action. If it all depends on your trading skill set. If you're a professional trader or have many years of trading under your belt, you might be able to get in here and take advantage of this volatility. But for most traders, I would suggest standing aside here. So here we have the double top. So we have the higher pivot lows that are occurring here. Okay, notice this is sort of a sideways transition as well, because we have the pivot high. We have sort of an equal pivot high here, and eventually price transitions out of this. We can see the demand building because we have the higher lows, higher low, higher low. So demand is building here. It's sort of consolidating or contracting, and then it pops higher and it moves into an uptrend here. We have the higher pivot low, price price moves up here, forms a higher pivot high, and then we get these indications that price is about to transition out of this uptrend into a sideways trend. So first of all, we have this retracement leg to the downside, which is 100% of the most recent leg to the upside. There it is there, that leg to the upside, 100% retracement. Not to mention that we have the most recent area of support over here is violated as well. So if we were to draw our imaginary support line across here, we would see that price pulls back and violates that first area of support, which is our first indication that the trend is potentially weakening, pulls back 100%, pops to the upside, forms an equal high or close enough to an equal high there, pulls back another 100%. So we have this sort of double top sideways choppy trend occurring. Each leg here is retraced by 100%. In the pop to the upside, okay, we can see the supplies coming in. We have the demand overwhelming, the buyers dominating over in this section here. Then we can see the sellers step up and attempt to push price lower. The buyers pop up once again and try to take control of price once again. Then it rolls over, and then the sellers begin to dominate. Price pops up, forms a lower pivot high right here, and then rolls over. And here we have the break of support. So these support reference points here are now broken, indicating that the demand has failed. The buyers have failed. Supply is now overwhelming. The sellers are in control. Price moves to the downside. So here we have particular price patterns where we'd be looking to go long the stock, to be a buyer. Here we're potentially looking to stand aside. If you have a bit more experience, you could be buyers at the support reference points. You could be sellers at the resistance reference points. All depends on your ability, okay, and your experience in the markets. And here we have this rollover of price here. The supply overwhelms, the sellers dominate, and price moves to the downside. So we can see a rapid move to the downside here. Okay, pops up here, forms a lower high, and continues on its way down. We can look at a few things in this example here. We have an uptrend on the left-hand side, a higher pivot low that occurs over here. Price forms a higher pivot high, Then we have price form a lower pivot low. So that lower pivot low there is in relationship to the most recent low, and then a lower high. So this uptrend is transitioned sideways and beginning to roll over. And then we have that series of lower pivot highs and lower pivot lows. So we have a downtrend occurring here. Price forms a lower pivot low here and then retraces up, forms a lower pivot high. So your expectation is that price will roll over and move to the downside once again. Okay, but what happens is that price tests this most recent area of support and then pops to the upside. Okay, so this bar here, we can see that this bearish bar to the downside here immediately is reversed by 100% here. So this is our first indication that the downtrend has ended. Okay, so price is moving in a downtrend there. We have this move lower, then it's retraced immediately by 100%. This is very accelerated price action. This particular price bar here, or price candle, was formed on a news announcement. Okay, so that's why it's so dominant and such a wide-ranging candle, is because it was on a news announcement right there. But we can see clearly that the trend had ended, okay, and transitioned sideways. So if you were looking to sell here, okay, you'd be right to look to sell here. You'd be looking for it to move lower. It's pulled back almost to this most recent low here. So if we draw the imaginary resistance line across here, we can see that price tests that and then begins to roll over and move to the downside. Then at support, it gets reversed. Okay, so that downtrend is over. We need to be out of the trade now. Okay, and then price pops to the upside. So this is this double bottom, okay, or it's a W type of pattern where we have that equal pivot low form. So we have the sellers dominating here, supply is overwhelming, and right here we have the buyers step up. Okay, the 100% retracement here indicates that the selling has been neutralized, or the supply has been neutralized. The demand is picking up and immediately transitions into an uptrend, a very powerful move to the upside. Price pulls back, forms a higher pivot low, and then pops to the upside right there. These are clear trend breakdowns. So we have price in an uptrend. There's the higher pivot low. Okay. Price forms a higher pivot low in relationship to the most recent. So there it is right there, the most recent pivot low. That's a higher pivot low. We have a pivot high right here, a higher pivot high here. Then price pops up, okay, forms a pivot high, chops around a little bit. Notice the retracement here. All of a sudden we have this minor support area here, once again, is violated. Okay, price closes down through that, and then it closes down through the most recent support, major support reference point. So here we have a breakdown in trend. This moves down to form a lower low. Okay, so this is one of those particular patterns where you have an uptrend transition straight into a downtrend. There is no sideways consolidations within this particular price pattern here. So you have to get skilled at recognizing these transitions very, very quickly. So we have price moving up. The trend is violated and moves down and forms a lower low. Notice on the retracement here, it only retraces up into the most recent pivot low. Okay, so what was once support now becomes resistance. Price presses up higher here. Okay, we can see that the tails on the candle indicating the momentum is slowing. Price reverses, rolls over, consolidates. So this is a lower low. So there's the most recent pivot low. This is now a lower pivot low. Okay, so we have the demand overwhelming here, the buyers in control, and immediately the sellers step up and are able to introduce enough supply to change the trend into an immediate downtrend transition. Okay, and price consolidates sideways here, chops around. Okay, this is one of these particular price patterns that just breaks down. So it consolidates sideways. Remember, if it was a weaker downtrend, you would look for price to potentially retrace a little bit, form a lower high, and then roll over. But here, price just consolidates sideways at this area of support and then breaks to the downside. So this is a strong indication of the supply that's occurring within the stock. So here, what we're wanting to notice here is, first of all, that minor support, the most recent high is violated, price closes below that. Then major support, the most recent low, is violated, so the uptrend is over and immediately transitions into a downtrend. So this is an area where we wouldn't want to be a buyer. Okay, the uptrend is over. We're now transitioning into a downtrend. If you were considering being a buyer in this area, very, very low odds for a successful outcome. What we're waiting to do is waiting for price to pop up, retrace to the upside, form those indications that the upside retracement is beginning to slow. The momentum, the upside retracement momentum is slowing. Look for price to roll over, get involved somewhere around these areas here. Short sell, take advantage of these moves to the downside. Here we have a downtrend, price forming a series of lower lows, lower highs, lower lows, lower highs. Okay, price pushes lower here. And then we have a lower high, then a lower low. And notice on this leg to the upside, it's a greater than 100% retracement. So there's our most recent move to the downside. Price retraces that by greater than 100%, okay, indicating that the sellers have lost control. Okay, the supply here is overwhelming. This particular price pattern here indicates that the supply now has failed and the buyers or the demand has stepped up and pushed price higher to form a higher pivot high. Okay, so this downtrend ends right here and it transitions into an uptrend immediately. There's no sideways transition. We can see that price forms this higher pivot high, pulls back, forms a higher pivot low, moves on up to form a higher pivot high, higher pivot low, so on and so forth, moves higher. So if you're able to recognize this particular price pattern here, you won't get caught shorting. So you wouldn't want to be shorting right here. You'd be looking to potentially wait for price to pull back, okay, form that higher pivot low and move to the upside. So these are great patterns when they happen. There's no chop, they're clear transitions straight from a downtrend. So these are shortable events here where you're looking to short sell the stock and see it move to the downside here, and then immediately you get this transition into the uptrend here. It's not official just yet because you're waiting for a series of pivot highs. This is the second one. This is the second lower pivot high. This is the second higher pivot high. So now you have your series. The trend is clearly now moving to the upside. So you're wanting to be a buyer on retracements, okay, pullbacks to areas of previous highs or minor support reference points, and then look for price to move to the upside. So the identification of this and your skill at identifying particular trend transitions will obviously save you from adverse outcomes. Okay, before we look at the next lesson, let's wrap it up here. So we're wanting to become experts at identifying the trend, okay, whether demand is overwhelming, whether supply is overwhelming, whether the trend has transitioned sideways, because they all offer different odds of successful outcomes. Okay, so once we're able to identify those particular elements of the trend, then we can increase our odds of successful outcomes. The highlights would be looking for price potentially as it pulls back through that first minor area of support in an uptrend. That's our indication of weakness. If there's a greater than 100% retracement or a 100% retracement, that's our indication now that the demand is failing. And just the reverse for the downtrends as well. So if you have price in a downtrend and then that retracement leg retraces up and closes higher than that minor resistance reference point, which is that previous low, or you have a retracement of 100% or greater than 100% of the previous leg to the downside, you know that now that downtrend has ceased, the supply has failed, the demand or the buyers have stepped up and they're beginning to take control. So you must change your approach to that particular instrument or that particular stock as well. So I'm going to go over this lesson multiple times. It takes a little while to understand the concepts, especially when we're using raw price data. We're not using trend lines, moving averages, anything like this. I'm wanting you to become an expert at analyzing the raw price data first. Then you can overlay those guides such as trend lines and moving averages and so on, because now you have a complete understanding of price movement, and then everything else is just relatively a guide. Okay, so in our next lesson, which will be in the near future, we're going to look at multiple time frame analysis, where we have potentially, if you're an investor, you're looking at an uptrend on a weekly time frame, but a downtrend on the daily time frame. So those particular events can be quite confusing. So how do we navigate those two events there, where we have conflicting trends on different time frames? We'll look at that. But once again, in the next week or so, we will go over the trend analysis phase 1 multiple times. Okay, probably take 4 or 5 resets of that particular lesson to understand it. So I'll see you again next time.